This is Nightly Business Report with Tyler Matheson and Susie Gehring.
Failure to comply. General Motors fined by its safety regulator for not answering all of the agency's questions about its safety recall. What it all means for the automaker.
And they're off. Alcoa out of the gate with a mixed bag of earnings, but the season is not expected to be strong, and that could lead to a bumpy road for stocks.
Countdown to tax day, 1 week to go before the deadline, but if you haven't filed your taxes yet, we've got a few strategies you could still use to your advantage. All this and more for tonight, Tuesday, April 8th.
Good evening, everyone. Another big setback for General Motors over that recall of 2.5 million cars for defective ignition switches linked to at least 13 crash-related fatalities. The National Highway Traffic Safety Administration now says the automaker had not met an April 3rd deadline to respond to its request for more detailed information about that recall. The regulator says GM failed to answer more than a third of the 107 questions about the faulty part and why it waited more than a decade to issue a recall after first learning of the problem. GM has been fined $28,000 and faces fines of $7,000 a day until it fully complies. Phil LeBoy joins us now from Chicago. So, Phil, what does all this mean for General Motors?
Susie, this is another example of the federal government and specifically NHTSA saying, knock it off. Start giving us all the information we requested and give it to us as quickly as possible, or else we will go to federal court and demand it if you don't turn it over as quickly as possible. Some people will hear this, Susie, and they'll say, $7,000 a day. Is that really going to compel General Motors to come forward and turn over documents? That's not the point here. That's the maximum allowed by law, $7,000 per day, which is what NHTSA has fined General Motors. This is more symbolic of the frustration that NHTSA has dealing with General Motors on this recall ignition switch recall issue and not getting documents. Just one quote I want to give you guys. At the end of the letter here, it says, to be clear, a complete response by GM means GM fully and substantively answers all questions and produces all responsive documents. In other words, GM's not complying completely, and the federal government is saying, we've had enough. We want all the documents and all the answers.
Has GM said anything, and why wouldn't they answer all the questions?
Well, General Motors has answered about 2/3 of the questions, and what they have said in the past is we're looking into this and we're doing our own investigation, and we will turn over all the documents when we have all the documents and all the information. Some of this is technical in terms of documents relating to the design switch, things like that, Tyler. But NHTSA, when you look at this letter, they make it very clear. Some of this is not technical answers. Some of this is you should know what you were doing, when you were doing it, and you should be telling us.
No more stalling from GM on this one. Thanks a lot, Phil. Phil LeBeau reporting from Chicago.
Well, earnings season for corporate America has begun, and tonight investors got the first reading on quarterly numbers from one-time Dow component Alcoa. The aluminum giant posted profits that came in a little better than expected, 9 cents a share compared with estimates of about a nickel a share, and this excludes charges for closing smelters. But revenues missed analyst estimates, falling to $5.4 billion on lower aluminum prices. Still, the CEO, Klaus Kleinfeld, sounded upbeat on the company's prospects, saying global growth is solid. Alcoa shares did trade higher in the regular session and rose slightly in after-hours trading on those first quarter results. So now that Alcoa's numbers are in, what can investors expect as more reports start filing in? Thomson Reuters predicts overall earnings should be about 1% higher from last year. That's a lot lower than the 6.5% outlook at the start of the year. Others, like FactSet, are a lot gloomier, forecasting an actual decrease in profits. Dominic Chu has more.
4 times a year, publicly traded companies in America have to tell investors how much they sold and how much money they made. Earnings season kicks off this week, and investors will be laser focused on those results given the near record highs in the stock market.
With valuations as high as they are, and certainly they're bumping against the highs of historical norms, there has to be a focus on earnings. And I think we have had so much disruption in this quarter with regard to the weather and other factors that there's an increased level of anxiety, which is understandable.
That increased level of anxiety could be a big part of the recent pullback in stocks. Wall Street experts are already reducing their expectations. First off, you should know that the bar has already been set very low when it comes to profit growth. According to Thomson Reuters, analysts expect just a paltry 1% growth in profits for S&P 500 companies from the same time last year. But there is a little reason for optimism. That same survey shows expectations for sales to grow by a slim 3%. That means that businesses are actually expanding and selling more product to customers. However, not all types of companies are expected to do well. Companies in the telecommunications services sector are forecast to show the best profit growth. Consumer discretionary stocks are also expected to do well this time around, while energy and financial stocks are expected to show profit drops. Of course, everyone's got their own view. Some like the prospects for the technology sector.
We're seeing a very significant amount of earnings growth there. We also see tech companies have the highest level of cash on their balance sheets. So they're fundamentally sound. They have a lot of cash to deploy. They could be reinvesting in their businesses.
Whether you're bullish or bearish on the stock market, you'll definitely want to pay attention to all the earnings reports coming out. For Nightly Business Report, I'm Dominic Chu.
On Wall Street today, stocks snapped a three-day slide. Investors bought up beaten down shares of technology, social media, and biotech companies. These are the same momentum stocks that have seen the sharpest declines in recent weeks. And that helped give the NASDAQ the biggest percentage gain on Wall Street today. The Dow rose 10 points. The NASDAQ, which lost nearly 200 points in the last three sessions, was up 33 points. And the S&P added 7 points.
Well, although the market was higher today, but since the S&P 500 hit an intraday high last week, we've had a little bit of a pullback, particularly on the NASDAQ. So as you might expect, some of the biggest losers on paper would come from the top dogs of the tech world. Take a look. Facebook head Mark Zuckerberg down more than $4.5 billion on paper since just last Friday. Amazon's founder Jeff Bezos, nearly $3.5 billion lighter in the wallet. And the Google guys, Larry Page and Sergey Brin, about $1.25 billion less rich each.
On Capitol Hill today, the Senate passed a bill that would retroactively restore jobless benefits to more than 2 million of the nation's long-term unemployed. That bill now heads to the House, where it may face significant opposition. But if it's renewed, the aid would mean a payment of $256 a week through the end of May for Americans out of work for longer than 6 months.
The White House is trying to close the gender pay gap. President Obama signed 2 executive orders today, both targeted at federal contract workers. The orders prohibit contractors from retaliating against workers for discussing their pay, and it requires contractors to be more transparent about their employees' pay based on gender and race. The president says the orders will level the playing field for all workers so no one becomes a second-class citizen.
When any of our citizens can fulfill their potential for reasons that have nothing to do with their talent or their character or their work ethic, we're not living up to our founding values. We don't have second-class citizens in this country, and certainly not in the workplace. So tomorrow, the Senate has the chance to start making this right.
And the Senate is scheduled to take up legislation that would update the Equal Pay Act of 1963, strengthening remedies for workers suing over unequal pay.
It was another good day for investors in utility stocks. The S&P Utility Index closed higher again. During the recent market sell-off, investor money has been pouring into utilities thanks to their high dividends. And some of the big names like Exelon, AES, Duke Energy, First Energy, and Con Ed, as you all see there, all safely in the green.
And some of those same utilities may find their power grids more exposed to hackers and service disruptions as Microsoft stops giving tech support for its Windows XP software, which is still used by several power companies. Josh Lipton has more on who may be vulnerable and what's being done about it.
With Windows XP, we're taking that to a whole new level.
A 12-year run comes to an end. As of today, you can keep using Windows XP, but Microsoft will no longer offer technical help if you get into trouble with that old operating system. Microsoft wants customers to migrate from Windows XP to more modern operating systems, such as Windows 8.1. Now, Windows XP might be old, but it still has a lot of fans. The operating system has an estimated 30% market share. But with technical support coming to a halt, some cybersecurity experts are voicing concern. They say Microsoft's decision could expose companies that still rely on Windows XP to hackers. Power companies, they say, could be especially vulnerable.
The vulnerability is real. I think it kind of goes without saying that the threat actors are out there, and we've seen various different types of interest.
Analysts say some utilities could be stuck with Windows XP because they require authorization from regulators before making any major software updates. And there can be a big price tag, up to $100 million to upgrade their computers. But Aviva Latan, Gartner's tech security analyst, says the threat is exaggerated. She says most power companies already have extensive security measures in place. And the dirty little secret about Microsoft's decision to end XP support, it's not really ending. Power companies and other enterprises worldwide can still get temporary technical support from Microsoft. They're just going to have to pay for it. Microsoft has already struck deals with the British, Irish, and Dutch governments to continue support for XP. The deal with the UK government is for $9 million. Analysts say there's also a lot of hype about this issue, but any utility company that hasn't gone to great lengths to protect itself from hackers is vulnerable to not only legal liabilities, but also a public relations disaster if the power goes out and they haven't protected their computers. So who is right? With Microsoft at least formally ending technical support today, we could soon find out. Josh Lipton, Nightly Business Report, Silicon Valley.
And coming up, demand for some of your favorite brands is falling. What that might say about the economy and some big-name American companies.
Energy Information Administration issued its short-term price outlook. It is expected that spot prices for West Texas crude, the oil produced in the U.S., will average about $95.60 a barrel this year. And Brent crude, that is expected to sell for just under $105. Today, West Texas jumped 2% to more than $102 a barrel, while Brent settled in at near $108.
Natural gas prices also closed slightly higher today, even as a new government report says the U.S. is sitting on a massive stockpile of reserves. That has energy producers pushing to export more of that gas. But it won't be easy. Jackie DeAngelis explains.
The energy business is booming in the U.S., and part of the surge includes natural gas. The Energy Information Administration says the U.S. is sitting on more than 2 trillion cubic feet of natural gas reserves, roughly 92 years of supply. So is now the time to export? Supporters say exports will help stabilize prices worldwide, especially in light of geopolitical tensions in Russia and Ukraine. They also say it will reduce the global carbon footprint and add valuable jobs to the economy.
I think we've seen real hard evidence that the shale gas boom, even when limited to domestic consumption, has had a tremendous buoying effect on the economy, both directly associated with the jobs for drilling, production, and distribution, but also for all the ancillary jobs associated with it.
But environmental groups are also trying to slow the export approval process because of concerns over the dangers of fracking. They also worry about prices for U.S. consumers.
The major concern from an environmental standpoint in exporting natural gas is that this will trigger fracking, the controversial drilling method that's caused all kinds of drinking water problems and other environmental problems across the United States. And it will also raise gas prices for Americans up to as much as 27%.
The Department of Energy has only issued a few approvals to export liquid natural gas, and only one on the East Coast, here at Dominion Resources' Cove Point facility in Maryland. If this $3.8 billion construction project gets off the ground, it'll create thousands of jobs, add millions of dollars in tax revenue, and it's fairly easy to do.
The export project requires very little equipment addition. We already have the pipelines we need. We have the storage tanks, the transfer lines, the offshore platform for loading the vessels.
While Dominion is still waiting for final approvals, it estimates that exports could add $2 billion to its top line over time. And other companies are also waiting to see if their grants will come through. But only time will tell how this war will play out and how the administration will play its cards. For Nightly Business Report, I'm Jackie DeAngelis.
Eli Lilly and Japanese drug maker Takeda Pharmaceuticals have been ordered to pay $9 billion over a drug linked to cancer. And that is where we begin tonight's Market Focus. Lilly's portion of the fee is $3 billion for marketing the diabetes medicine Actos after a jury decided that the companies hid the drug's cancer risks. The FDA warns that there is a 40% increase in bladder cancer risk for people taking Actos long term. Lilly says it will be indemnified by Takeda for the expenses, and both companies say they will challenge the verdict. Shares of Eli Lilly, not much change today, dropping just a fraction to $58.58. Nike shares were higher in today's session on an upgrade from Stifel. The firm upgraded its rating to buy from hold on the athletic apparel maker, citing a correction in the stock's price and what it refers to as standout fundamentals. The stock was about 3% higher today. It closed at $72.92.
American Airlines lowered its first quarter guidance, blaming flight cancellations from the harsh winter weather. The carrier grounded more than 34,000 flights in the first few months of this year. Despite that weak outlook, American shares edged up a fraction to $35.98. And get ready for Google Glass at the office. Google announced today a new effort called Glass at Work to push its wearable technology into the workplace. Developers who are creating software for U.S.-based enterprises can fill out a form online to be considered for a pair of the glasses or multiple pairs. Shares of Google rose 3% to $557.51.
And with the new earnings season kicking off, really just today, Wall Street will see how changing consumer tastes and buying habits impact revenues at some of the biggest names in consumer products. And it may not be pretty. Sarah Eisen has more.
Wall Street says the economy is gaining steam. Tell that to the companies that make food, beverages, and household products. The latest tracking data from Nielsen shows weakness across several categories in the last month. Everything from cereal to canned soup posted declines in dollar sales. Some of it is shifting tastes as Americans ditch traditional breakfast cereal and soda for healthier options like yogurts and waters. The unusually frigid winter didn't help keeping Americans indoors and pressuring sales further. But analysts say even without the habit changes and weather issues, it's flat wages that are the big problem for these companies.
The uncertainty in the economy is going to continue, and we've seen it for the last few years. The high-income consumer is actually doing well. The low-income consumer is struggling. The weather in the first quarter certainly made things a little bit more exasperated, but we think it's going to be tough sledding from here going forward.
In February, the household products felt the pinch. Sales of hair color products dipped almost 4%. Sales also fell for batteries and toilet paper. Companies from Procter & Gamble to Clorox feeling the pain.
We're definitely seeing a lot more discounting this year versus last year. Companies are striving to get volume growth. They've been struggling for the last few years, and we think we're going to continue to see promotional activity over the next couple of years.
We'll see what it all means for the bottom line as earnings season kicks off. Keep in mind, this has been a challenging environment, so the guidance or the forecast for the future will be key to see if there are any signs of a turnaround for the consumer. Tomorrow, we'll get a report from Bed Bath & Beyond, and then next week, Coke and Pepsi. Those insights on the consumer will be key. For Nightly Business Report, I'm Sarah Eisen.
John Fauché now joins us to talk more about the consumer staples sector and consumers. He's senior household and personal care analyst at J.P. Morgan. So, John, do you think these trends that Sarah was just reporting on is because of changing consumer preferences, or is it because of just tighter household budgets?
I think it's a little bit of both. I think depending on which category you're talking about, it could be consumer preferences. For example, we're seeing weakness in carbonated soft drinks as women turn away from diet soft drinks because of concerns about aspartame. But then in other categories, we're just seeing higher levels of competition, and that's what's driving the pricing down. But I would say pretty much across all of these consumer categories, volumes have been weak coming out of the recession, and they've remained that way. You know, maybe it's fewer households, maybe it's just people cutting back. It's definitely been a longer-term issue.
You know, a lot of these stocks, when you think of the consumer durables or the consumer stocks, they are defensive stocks. Everybody's got to buy toothpaste, toilet paper, paper towels, and so forth. But what we're beginning to see is that those margins in some of those companies are being squeezed because they've had to discount so much and do inducements through coupons to get people to buy. How material are these effects on those companies?
I'd say they're somewhat material. The bigger impact we've seen in terms of expectations coming down, in terms of how much money these companies are going to earn, that's mostly come from a stronger dollar. So that's really why earnings numbers have come down this year. But we are seeing further discounting. And what's really happening is emerging markets like Brazil and China have slowed down, so there's less growth elsewhere. And what that means is these companies are fighting more aggressively for the growth here in the U.S., de minimis as it is.
Mm-hmm. So do those discounts really help? Do they bring in more growth?
Yeah, what we're seeing right now is it's not bringing in more growth for the categories. The volumes, as we said, have remained weak the past couple of years. We think household formation has been light, people not moving out of their parents' houses, not having as many kids. And so there's just not that much volume to go after. So when everyone's competing harder, the prices go down, but the overall level of volume growth doesn't go up. It's just more fighting for share.
That's an interesting point you just made, John, about the discounting being important, but not as important as a stronger dollar, number one, and not as important as slowing growth in some of the emerging markets or less mature markets. Let's turn to some of the stocks in this category that you actually like, leading off with Monster Beverage, which is a controversial company, John, and it is a single product company, to my knowledge. I mean, they may have other versions of their Monster beverages, but this isn't a company that doesn't have some baggage.
No, it definitely has some baggage. We upgraded this stock recently, just back in December. And what we really thought was, while there are some concerns about some of the marketing and how they may need to change their marketing up, most of the consumers who buy Monster Energy drink know what they're looking for. They're looking for extra caffeine, they're looking for energy. And the product actually has less caffeine than a normal Starbucks coffee. So while we think there may be some marketing tweaks they have to do, we don't think there's any major wholesale changes. And they're going to grow revenues about 12 to 15% this year. I don't really have many companies that can say that.
All right, John, we're going to have to leave it there. Thank you so much for coming on the program.
Thank you.
John Fauché with J.P. Morgan.
And up next, 1 week to go before taxes are due. If you're a late filer, that would be me. Some tips that might help you avoid leaving money on the table.
Some more news on General Motors today. In the Insurance Institute for Highway Safety's latest front-end crash test, this is of midsize SUVs, only 2 models out of 9 tested received a rating of good. And guess what? They're both made by GM, the Chevy Equinox and the GMC Terrain. The Toyota Highlander earned an acceptable rating, and the rest were either marginal or poor.
There's a big change coming to frequent flyers at the recently merged American Airlines and U.S. Airways. No more free bags. If you use miles you've earned to get a free ticket, or if you paid full price for an economy seat, you're no longer going to get free checked baggage. And some elite level frequent flyers on those airlines are getting hit as well with 1 less free bag than before.
And finally tonight, sorry to tell you, there's just 1 week to go before your federal taxes are due. If you haven't done your 1040s yet, there's still some time. And if you're a last-minute filer, Sharon Epperson has some money-saving advice on getting the most out of your return.
The tax clock is ticking, yet 1 out of 5 taxpayers still hasn't filed their taxes. Many of these late filers may be due a refund. This year, the average refund is about $2,800, according to the IRS. Yet millions of taxpayers will likely wind up leaving money on the table.
We found about 50% of the returns had inaccuracies, and about 1 in 5 of the returns actually left money on the table, to the tune about $500.
It's not just a missignature or a typo on a Social Security number. Last year, taxpayers failed to claim $1 billion of deductions to which they were entitled, according to H&R Block. And the same could happen again this tax season.
Still, there are many money-saving tax strategies that you can take advantage of, some of them perhaps for the very last time. Tax professionals are keeping a close eye on tax provisions that are called extenders.
The extenders is essentially a bundle of tax provisions which are not permanent, so they would have to be extended for people to claim year after year. They've been extended 4 times out of the last 7 years, but at this point, some of the really popular tax breaks, 2013 could be the last year to claim them.
These tax breaks impact millions of students, teachers, homeowners, and other taxpayers. 2013 may be the last opportunity for filers to claim deductions for college tuition and fees, teachers' expenses, mortgage insurance premiums, and local and state sales taxes. There are some new options that have come this tax season. If you're self-employed and work out of your home, there's an easier way to claim a home office deduction. Measure the square footage of your home office and multiply that by $5, up to a maximum of 300 square feet or $1,500. And while charitable deductions aren't new tax breaks, this way to claim one is often overlooked.
If you are doing volunteer work and driving around to do that volunteer work, you actually get a mileage deduction.
And if you're a very late filer and you haven't filed your 2010 return, April 15th is the final deadline. The government is holding $760 million in unclaimed refunds, but after the 15th, that money becomes property of the United States Treasury. For Nightly Business Report, I'm Sharon Epperson.
And you were listening very carefully because you're going to your accountant.
I am literally leaving right after the program and going to our tax pro.
I hope you took notes.
I did.
From what Sharon reported. That's Nightly Business Report for us. I'm Susie Garrow. Thanks for being with us.
And I'm Tyler Matheson. Wish me luck as I go to my accountant. Have a great evening, everybody. We'll see you back here tomorrow night.
I'm Susie Garrow with the Nightly Business Report News Brief. General Motors is getting fined $7,000 a day by federal safety officials for failing to provide answers about the recall of more than 2 million cars with faulty ignition switches that have been linked to 13 crash-related deaths. On Wall Street today, stocks ended a 3-day slide as investors bought up beaten down shares of internet and social media stocks. The Dow added 10 points, the Nasdaq up 33, the S&P rose 7 points. Alcoa kicked off the first quarter earnings season with a slight beat on earnings per share, but revenues missed estimates on lower aluminum prices. And more than 4 million open jobs were advertised in February, the most in 6 years. Be sure to tune in to Nightly Business Report right here on your public television station.